What's up, guys? For today's video, I'm going to go over how to build a winning system and how to get started in options trading. So the first thing, when it comes to actually being able to trade, we need a brokerage, right? And in this case, I love WeBull. Big reason being, fees, commissions, stuff like that. But also right now they're running a thing, when you sign up, you can get 5 free stocks. And this means a lot for, smaller accounts, right? That can be 15 extra dollars in capital, which might not seem like a lot, but that can be a world of difference. When you refer friends, you can get 10 shares, so that's $30 more of capital to build upon. And if you refer 3, you get at least $150, which is 1 share of Apple. So, keeping that all in mind, if you do that, that's about $250. So maybe you start with $50 and then you push that to a couple friends who may be interested in investing, don't have a broker. There's, about $300, $200, $250, depending on how many people you refer to get started with an account. You don't need any crazy amount to get started in options. 100 is definitely doable, 200 even better, 300 we can start to work a little bit more in terms of scaling contracts, stuff like that. And once we get to 500, I think that is a very, very, very good amount to start with, but 100 is certainly doable. Now, when it comes to actually, building a system, the hardest part in trading is going to be emotions. This is just part of the game. Once you put real money on the line, these emotions get stronger. So it's one thing, to keep in mind, and something we want to work in our system to take some emotions away. I'll start talking a little bit more about emotions later, but for now, how to build a winning system. So the first thing, 2 things that I would really take into mind are your personality and your schedule. Your personality is going to dictate more or less, what type of trader you really are or could become. And for me, I like to overthink things a lot, so I really focus on a very, very simple system. My system is based off of key levels, flow, and VPA. The second thing would be schedule. So for me, I am a collegiate baseball player, working on my 5th year of college, getting my master's degree. So my schedule's a little bit different. There's some days where I can trade mornings, some days where I can only trade power hour. So your schedule is going to dictate also what type of trader you can be, as well as your availability. Keep those in mind when really going about building a system. But the overall things, when we build a system, and the reason to build a system should be, what is the goal of our system? In my opinion, it should be finding consistency in any type of market. Bull market, bear market, chop market, doesn't matter. We want to be able to be profitable. Is the system repeatable, and does it help to manage risk and emotions? Keeping these in mind when building your system, I think, can really help. And it's going to take time to build a system. It took me about a year or so to really build a system that I stick with every single day. Being able to adapt the system not only to market conditions, but also to each day, but having, those same core things in line. Some things, to think about in terms of what we want our system to do, and what should be some key points in our system. I think the first thing would be, how to find place. For me, this is through flow. I'll use unusual whales here. And what I do is, I just go through this here on hot chains and tickers. I use this tab and I look for high volume, out of the money contracts that are close to expiring. I'll use V here. These 325, 230 calls, like that a lot. 240 calls getting hit. V finished today about 218. So those are $12 to $22 out of the money, and they expire in a week now. So, I like that a lot. Shows me the potential magnet effect. We also have 325, 205 puts getting hit. I like this for a big move in both directions. When it comes to levels, this is really, part of the system is when to enter. I'll use V in this case as well. For Monday, I have levels set at 218 and 220.65. How I create these levels, let's delete this. How I create these levels is simply based off of that 20-25% ATR method, and the 15 and hourly charts. If we look here on the hourly, I'm going to flip back. Looks like, 220.65, very big level for a potential move to the upside. And I have price targets set that help me identify, where I'm going to scale, where I'm going to look for big points of resistance, also help to select a strike price. Our system should have a way in place of, when to enter. Maybe you're a levels-based trader as I am, so I'm going to wait on a 5-minute candle close above or below our levels. So if I close above that 220.65 level, I will enter calls. I'll also use the type of candle to enter into calls or puts. Close below 218, I can play the retest. I can play a close below, just in general of that 218 5-minute close to enter into puts. We also should have a way in place of playing the gaps. This market has been gapping a ton. For me, that is the ORB method. I will link a video to the ORB method, but it has been very, very helpful for me, not only on SPY and QQQ, what you can trade every day, a lot of liquidity, a lot of volume, but it also helps a lot when playing the gaps. And in this market, as I said, gaps are almost a daily thing. Another, key thing, and I think the most important thing about your system is you should have rules and a risk management in place. Risk management includes, a stop loss. Are you going to use a hard stop, or are you going to use a mental stop? Maybe, you enter puts on 218 and your stop loss is above that 218. Okay, cool. That is built into your system. For me personally, I use a 10% hard stop loss. That has worked for me, helps with my discipline. Second, scaling. Where are you going to scale? For me, I scale in thirds, 20%, next big resistance, and then I leave a third for runners. And that's what works for me. Not every system is going to work for everyone, and that's the importance of building your own system. And it really goes because we want to be self-sufficient. It's rewarding to find your own plays, execute your own plays, and make money off your own plays. There's no lying about that. And I think that's something very, very important. Lastly, when it comes to risk management, is sizing. What is my sizing going to look like? If I'm a smaller account, say maybe a $500 account. In this point, I might have to use 20 to 25% of my entire capital, so about $100 on each play. Once I start getting a bigger account, maybe I use 5 to 10% max on my plays. This is what I do personally. But when I did have a smaller account, I started with about $100. And in that case, I probably will have to either play one whole contract if it's early in the week, maybe a really, really good setup, AMD, Apple are two that come to mind for that. Or maybe I've identified some smaller tickers that aren't too OTM. NEO would be my favorite for that. A lot of liquidity, cheaper premiums, and we do get some pretty vicious moves out of that. When it comes to actually, building the system, it's going to take some time. It's going to take some adapting. It's going to take, learning from our mistakes. Go back in, think about the trades we've lost, reevaluate the trades we lost, the trades we won. Why did we lose them? Why did we win them? Maybe make a quick sentence jot down of why you won or lost. Circle back to these on the weekend, study them, and I'm going to guarantee you see some sort of theme. For me personally, a lot of my big losses early came from overnighting contracts, and in general, letting a failed day trade turn into an overnight or a swing. In this case, never really works. You end up losing a lot more money than if you would have just respected the stop loss. So that's one thing to think about as well. And it's going to take time. I'd love to say, it's a one-time thing. You can do it really, really fast. Cool, you can develop this, but I've gone through multiple different systems that I've thought until I really found one. In my system, as I stated, flow, levels, VPA. VPA and levels were the first thing I started with, but I noticed, I was missing some big plays. That's where flow came in and the ability to not only read the flow, but kind of break it down a little bit more to see where these big movers, what they had in common. Flow was a big one. Those high volume OTM calls that are close to expiring, as well as levels. And VPA just shows me, where the really, really big moves are capable of happening. The higher the volume node, the more congestion, the slower price is going to move. Cool. I like to, notice those smaller volume gaps as they can move more. Now comes the fun part, the hardest part of trading, emotions. Emotions are definitely the hardest part. If anyone tells you otherwise, I would love to debate, hear their reasoning, but some ways that I've kind of helped to manage my emotions are don't size in terribly heavy. Don't put anything on the line that you're not willing to risk. And I noticed, when I put, more than 10% of my account in is when I start to get emotion trading. And for some reason, that's just a mental thing for me. Can't really give you a great reasoning behind it, but I have noticed that that's when I start to get emotional trading. So I don't ever size in higher than that. If I trade really bad, maybe say 2 or 3, I'm gonna take a step away from the computer, regroup, get my mental back in check, and then I'm just going to use one contract size. It's perfectly okay sizing with one contract. This helps me get my momentum back, some confidence back. It really helps me to look more or less for, the perfect setup, get that confidence back as I stated before. Secondly, accept the risk going into the trade and have a stop loss. This can be mental or physical, as I stated before, but have a way to manage risk, have a stop loss in place. Stop losses are going to save your account. Let them do the hard work. On top of that, another very, very important thing is take profits. You won't go broke if you take profits, right? Even if they're 3 to 5%, cool, take profits. Next big key for me was, and I would recommend with controlling emotions, would be stay off social media while you're trading. Every day there are 1,000% gainers, 500% gainers, 100% gainers. Cool, stay off while you're trading. And I would even recommend, not really looking at those as much because, those people aren't going to show their losses. They're not going to show anything really besides maybe that one run that they got that's 3,000%. In that case, I could say that was more based off skill and having a system. But if they have 3 to 5 runners, 5 to 10, anything of great number, I'd say most of that's based off of luck. They don't really have a system in play. And, that is not the best way to go about if you want to make trading a job in the long term. And lastly, step away from the screens. Go enjoy life. If you have a goal, you hit your goal, go enjoy your life, and just, just step away from the screen. This really helped me a lot to put trading and life into perspective and really get a grasp over my emotions. Nothing feels better than hitting your goal and then stepping away for the day.